A handful of stocks went absolutely vertical, and most people have absolutely no idea why. Nebius jumped over 16%, SanDisk, Western Digital, and Seagate all printed double-digit gains. Teradyne, Applied Materials, and Marvell joined the party too.
Holy cow, people, I am not anti-tech. I am not a Luddite. I like data centers so much, I wish I lived in one.
This wasn't random, and this isn't just tech earnings are coming out. There are real catalysts behind the moves, and we're gonna get into every single one of them. Now, before we get started, if you're trying to make money in any market, whether up or down, and trying to find the next biggest stock, go ahead and hit that like and subscribe button. It's the type of content that I'm bringing to you guys and want you to be a part of the ride. Thank you so much. Now let's get into it. So let's break it down. Nebius up 16%, Teradyne almost 12%, SanDisk, Western Digital also up almost 12%, and Seagate over 10%. AMAT and Marvell, just a few other names that absolutely ripped as well.
Two out of SanDisk, which is up 570% year to date, Micron up 240%, Seagate up 224%, Dell up 221%, and Western Digital up 218%.
Now, two different stories are actually happening here at the exact same time. One is a pure AI cloud endorsement, while the other is a sharp rebound in storage and memory names. We're going to dig into both. Now, first off, when I say beaten down, they've only been beaten down over the last few weeks, but some of them have been beaten down hard. I'm talking 20 to 30% losses.
We've had some sickening days of late where all these stocks that I just mentioned got clobbered.
However, year to date, most of these stocks are up anywhere between 100 and 300%.
You know, I think we're going to be undersupplied for all of 26 and 27. And so what does that mean? Tremendous earnings power. SanDisk will report next week. And we've been writing in our notes, who will be first to $50 of annualized earnings, SanDisk or Micron? And quite frankly, it's a toss-up. But, you know, SanDisk is right there. And
it's absolutely insane. And that is real demand. It's not just fluff or a short squeeze. So let's start with the biggest mover yesterday, Nebius. The catalyst is that Nvidia filed that they own roughly 9.3% of the company. Now, this is not a brand new relationship. Nvidia announced earlier this year that they had already invested around $2 billion into the company. Going from $2 billion to a 9.3% stake is a huge jump and shows significant backing into the future projections of this company. And Jensen Huang is making his vote of confidence very clear. So why does this matter so much? Nebius is one of the pure play AI cloud companies. They take NVIDIA GPUs and turn them into usable AI compute for hyperscalers. And they already have massive contracted revenue. A multi-year deal with Meta worth up to $27 billion. Significant Microsoft commitments and a combined backlog worth up to tens of billions of dollars. Management is guiding to a $7 to $9 billion run rate through the end of this year. And revenue is growing strong year over year. All right, so that's Nebius, but what about the memory and storage story? Here lies SanDisk, Western Digital, and Seagate. Like I said, over the past few weeks, these names have absolutely been destroyed. However, AI data centers are still hungry for storage, and that demand is not disappearing, it's only growing.
But again, you know, when you think about the added demand from AI, particularly high bandwidth memory, as well as agentic-led AI servers, you know, I don't see this shortage being alleviated into 2028. And so, you know, this is definitely a cycle unlike any other cycle I've seen. And so I do think that peak multiples will be higher this time. And I think peak earnings will not be 26, but 27. And that means there's still upside.
Several of these companies have already sold out their 2026 capacity, with some of them running into 2027 and even 2028, with multi-year contracts with these hyperscalers. When a sector is getting this oversold with demand still intact, you're going to see these rebounds. It would make absolutely no sense for companies that have gone up 100, 200, 300% year to date to just absolutely crumble when there's still demand and revenue growth ahead. That's why you see these violent short coverings and people buying the dip hard. Companies like Teradyne and Applied Materials are basically the picks and shovels of the semiconductor manufacturing play. When AI chip production is staying strong, these names are typically going to be strong as well. Now, Marvell sits in this sector as well, and basically is providing AI networking and custom silicon, which is another area that has to scale as more and more GPUs are getting deployed. So when you zoom out, it wasn't just a few random stocks are going up. It was a coordinated move across different AI infrastructure stacks. I'm talking the cloud providers, the storage and memory plays, and the hardware. On Nebius, the bull case is that they need to keep on hitting those capacity and revenue targets. If they do, the stock can keep working out from these levels. However, the risk is execution. They are priced for very high growth and they need to deliver. Now, on the memory and storage names, key question is, was this recent sell-off just a healthy reset, Or are they actually going to cool off on their capital expenditures? Right now, with their capacity being completely sold out and the growth in these data centers really tells a strong story. What we need to be watching out for next are the big tech earnings coming in the next few weeks, any pricing or capacity commentary on the storage and memory names, and whether Nvidia or any other hyperscalers are making massive moves in this space. So that's the breakdown. Add these companies to your watch list. We want to see that revenue is continuing to grow while the cost of goods sold is maintaining at a healthy level in line with the revenue growth. If that video was helpful, go ahead and hit that like and subscribe button. Thank you guys so much, and I'll see you next time.